Hey guys, alrighty. So we ended up getting a nice little gap down overnight. Played out kind of how we were looking, that we were looking for that bearishness based on, the dollar and the 10-year yield. Played out really nice, so we did get a big old drop. However, just like usual, the bulls went ahead, or the bears went ahead and choked that last second here. So kind of what we got going here is we have a really nice M pattern that's playing out. So this pattern can play out one of two ways. We could either play out a much larger M pattern and go back to some really, really deep supports that date back to really almost middle or end of November, beginning December. Or we can play out a more short-term M pattern and then kind of bounce up here. So I'm still not convinced one way or another. I found it interesting that this is another opportunity that we had this week to get so close to all-time highs and fail to put it in. There was some statistic that this is like only the third time this has happened, that we've had 6 opportunities of 1% within 1% of closing a new all-time high and did not touch it. This is only like the third year this has ever happened. So and also another interesting fact I saw was it has been about 226 days, I believe now, since SPY has seen a negative 2% day. It is the second longest streak of that, basically. So very interesting here. A lot of stuff is just kind of hanging on by thin air, it seems like. We got jobless data tomorrow morning. I do expect a decent reaction to that at 8:30. Which way? We'll have to wait and find out. More likely than not, I would assume, if it's not perfect, that it'll be bearish, but I do expect a big reaction there. So kind of what we got going here is we got a new bear channel forming here. Yesterday's doji candle was far more indecisive. We could have bounced either way. Today's doji really is a nice reversal doji. I mean, this is a really, really nice morning doji star reversal pattern. So in theory, we should bounce to the upside. And really, if you look at our pattern here, I mean, this is kind of what it's been. We got up, down, we got up, and then we should see down right here, which is what we're in. And then we should see a move to the upside. So the question is, are we going to get this bounce early before we get to the demand, or are we going to come all the way down to the demand? Really, the way I see it is if we close below the 20 EMA support right here at 471.56, likely we retest 467.41 demand. If we break and close under that level, which is a support now for over a month, then likely the bigger sell is coming. If we put a new demand in tomorrow at 471.77 and bounce up and get back over 474.1, which is the 8 EMA resistance, likely we make another run at our double supply of 477.86 to 478.15. Looking over at ES here, you can see just how flat we are. Same thing, we did come down under the 8 EMA. Now, we did bounce and barely hold 47.69, which is the 20 EMA support. So again, if we come lower, then our target is 47.32 and a closure under that, likely we're looking at 46.67. Now, if we can double bottom here, our target is going to be a move back to 48.11, which is that supply. So 48.11 to 48.36 is major resistance to break out, and then we have 47.32 as our major support right now. Now, the Qs is a really, really interesting one. This is the only one of the 4 that actually had stronger daily buyers. So we closed red, yet we had daily buyers come in stronger. That's the second day in a row now that we have seen that with stronger buyers, but a red close. Now, I will say a lot of that has to do with the absolute last second spikes we're getting the last 15 to 20 minutes of the day. When that spike's happening, a lot of buying is coming in. So, it's hard to get a good read on that. But same thing here, we have that massive reversal doji pattern here, which could pop us to the upside. If we pop to the upside and get a new demand at 406.1, we're going to need to close over 409.58 and realistically 411.52, which is our double supply, to then have chances of a really strong breakout. However, if we have a double top or another gap down and we can close under 404.5, which is the 20 EMA support, I will look for another move back to 396.34. If we zoom out here, you can see using this as our support line right here. We're just a little bit off of it. Let me fix that for us there. I hate when TradingView, I don't know why, it always just throws my lines off just ever so slightly. So there we go. So basically our bounce today was nearly perfect off of the support line that dates back to October 19th. So essentially, if we lose tomorrow 404.21, we will have again broken this bull channel support and we will be looking for a move to the downside. We have that same M pattern right here that could play out to 385 area. This one is a little more steep though in the middle, so likely this does bring a bigger sell-off. So again though, we have our clear range that we've been in for a month now, and really until either way we break that, it's tough to feel super confident one way or another. Looking at NQ here, we got our double top here. We came back down. Kind of, we had almost a quad top here, but we basically had 3 doji rejections in a row. And now we got our resistance, our rejection off 16,981. Same thing though, we couldn't quite hold down low enough to close below the 20 EMA support. If we can close under 16,771, likely we will target 16,455 area. But again, if we double bottom, we can close back over 16,981. There's a potential to run to 17,130 area. You can see here on NQ, we're actually forming a nice 4-point touch resistance line and maybe a nice little slow burn to the downside bear channel right here. Now, I said I was done with the VIX, but I just got to point it out because it's such a wild move here. If we take Friday's close right here and go up to our high, 21.37%, we have moved from our close on Friday to our high a day. Of course, at close, it's closer to about 17%, but still, this is the biggest 2-day move on the VIX since back in middle of October before the rally started. Now, the interesting thing for me here is this is bigger than the previous move on the VIX. So when we had our move in middle of October that was similar to this size, it was about a 16% total from low to high move. We are looking at a 22% almost low to high move, and we have dropped about 50% of what we dropped back then in October. So essentially, we have gone almost 25% more, almost 50% really, more of a move up on the VIX, yet we have only seen about 50% of the drop on SPY and the Qs. So again, either, this is where this market is difficult because the VIX, even now the VIX is breaking out. The VIX even made sense this last 2 days. It had a big breakout. But again, you see these huge 11% move, 10% moves up days on the VIX, and we're, barely closing down 0.5% on SPY and NQ. Doesn't make a lot of sense there. So if we look at the doji reversal pattern on SPY and ES and Q, it does correlate perfectly with a hard rejection off of our 15.2 to 15.29 double supply area. Now, if you look here, this is the highest at 15.4. This is the highest level since November 10th that the VIX has been. Now, just for fun, where were we on November 10th? Let's see. We were all the way... On November 10th, SPY closed at 440.61, and today's close is 472.29. So again, I'm not saying it's a perfect correlation, but we're about $32 higher than the last time we touched those levels. That's quite interesting to say the least. Now, going over to the dollar here, we had our huge breakout like I was talking about yesterday. That was the official breakout. Now, we came up, we took out 103.632, which is a great level. Took that out. However, same thing. We have a massive doji reversal candle form here off the 50 and 100 EMA this is 200, sorry. So 100 and 200 EMA resistance here. If this is our rejection point, we could look at a downside move on the dollar which could provide an upside lift on markets. Now, again, same thing here. We have the reversal doji to correlate perfect with the reversal doji on ES and NQ. Bears are really going to need to see the dollar hit this 104.1 area, and bulls are going to want to see us back under 102.3 area. Now, going over the 10-year, same thing. We had our massive breakout. We came up to the 50 EMA, hard touched it, and rejected perfectly off it, took out our previous level there. So now it's, this is more of a continuation candle up here on the 10-year. So that likely means that we could continue up. Realistically, the bears are going to need to see the 10-year, at least up in this 4.2 to 4.25 area right here, if they want to see that big downside correction. However, if we double top or just kind of come back down like we did right here on the 8th, get back under 4.05 area and put a new supply in, likely that's going to provide that upside lift. So now, basically, VIX and the dollar says reversal to the upside tomorrow. The 10-year says we could still see some more downside. So I'm curious to see how tomorrow will play out. The jobs data, 8:30 a.m., I do think that's going to set the tone. Basically the trend has been for, I would say since January started, is that we kind of get some basically morning weakness, dump through the morning, and then by mid-afternoon, we're just kind of recovering. Which, honestly, that's a lot of what we did. If we go back to... really zoom out here. If we go back to this July through October low here, if you remember trading in this time period, it was terrible. I hated trading during that time period. But if you remember trading during that time period, it was the most bullish bear trend I've ever seen. Every single day we would be pushing to the downside, and then all of a sudden we would just get these massive end of day reversals. That's kind of how this one feels right now. None of these days, and yeah, we had some big red days and stuff like that, but even look at this candle. So, this is let's see, that's a pretty solid day. So that's about a $7-ish move there on SPY. And the next day, we closed here at 438 and our low is another $7 day. But again, those days just most of the move felt like it came overnight, and everything intraday was it was a reversal. So it was tough to really get a good feel on a bear trend. So I feel like we're kind of heading back to a time period like that where we might see some slow work to the downside, but realistically, it's not going to be a strong, straight bear trend like we were used to in 2022 when we had our bear market. So I am neutral for tomorrow based on the dojis, but I do still see some end of week weakness, and I am looking for some downside still into end of month, especially into earnings next week for some big tech, and then into FOMOC on the last day of the month. So